Hey, welcome. This is Professor Drew Blazik, and I'm going to show in this financial modeling example in this video, we're going to make a robust historical stock analysis where we can find the stock price of any company within a date and a time frame. We're going to calculate the risk involved in that time frame, and we could do up to, in my example, 5 stocks, but you can go as large as you want, or as many stocks as you want. So to do a prototype here, what I did earlier, but we're going to make it a little bit different. This will look like we got a start date, we got an end date, and you can change that stuff. We got daily returns, we got weekly and monthly, and a toggle switch. I have the returns, and then we got our summary statistics. And one thing I don't have here, we will calculate is a Sharpe ratio and the trainer index or ratio. And we'll calculate all that based on, and this is the best part, based on the dates that we chose. And I'm going to show you how that works. What if I change the date to 2008? It automatically adjusts in our headings, so you can copy paste this into a presentation of comparison all the companies we want to compare. It'll automatically show the date and the how many years and the range that we have. Okay, so let's get straight to it. I have this Excel sheet. Let's go to summary stats. The first thing I highly recommend, let me just take that, I'm going to take this one to the other side so it doesn't mess things up here. Alright, so what we're going to do a little different than what you just saw. I'm going to have the summary statistics and everything we enter in on this sheet, and then the calculate or the returns and the stock price. We don't need to see 20,000 rows of daily returns for how many years. We'll have on this sheet, so we can keep this one clean with all our information. Okay, so let's type this up. The first thing we're going to do is the start date, and then the end date, and then the stock ticker symbol. Here I want to type in the frequency. That's going to be, for example, 0 is daily, 1 is weekly, and 2 is monthly in Excel, which does give us a bit of a challenge when we create this model. Next, let's calculate, or not calculate, but let's plug in some ticker symbol or some stocks that we know. So I'll do Mosaic, I'll do GM, let's do Home Depot, Tesla, and let's say Google. Okay, one thing you have to have the paid subscription to Excel to get, so I'm going to highlight these to get this data types. You must have the Office 365 and you have to be logged in your account. Highlight those ticker symbols and then hit stocks, and that's going to automatically convert. What do we have here? Google's not being recognized for some reason. Oh, because I typed in good. So I'm going to type in GEO. Oh, hold on 1 sec. I don't know why it's not working here. All right, DOG. Okay, now we got Google. So now Excel recognizes these companies an actual company, and we can pull out some data through that. However, if you type in Mosaic, how are you going to know what this is? Well, I don't want to make this cell real large. So, okay, I see the Mosaic company, and I don't like that little bank-looking symbol there. So what I'm going to do is I'm going to go right underneath it, and I'm going to say equals, and I'm going to select that cell. And what pops up is a bunch of data points. So I'm going to go all the way down, and I'm going to look for the ticker symbol. There's a lot of data points we could pull up, so you can be creative what you want to bring into your summary. And then after you do it just once, I'm going to hold down Shift, go to the right, Control R, and then that's going to tell me what I entered in. So if you enter in Tesla, TSLA, it'll automatically show there. We're never going to touch this. We're only going to enter in information in the blue cells. But we want it there anyways. Let's do a date. We'll do 1/1, we'll say 2010. And then let's say we want to go to today's date. All you do is type in today, close the bracket, and that will give us the most current date. So this looks good on this part of our Excel sheet. Now what we want to do is pull in the data under this tab, returns. Okay? So what I'm going to do is, first off, I don't know what company is which. I think it's good to do this. I'm going to say equals. I'm going to go to the summary stats, and I'm going to select Mosaic right here. That will bring it over. I'm going to bring it over one more so. I'm going to show you why in a second. Now if I drag it over 5 spots, now I know the company name. So if you change that, it automatically will change it over here. Next, what we're going to do is we're going to calculate the returns of the stock. Okay, so I'm going to do this twice. The second time, I'm going to drag it over. The first time, I want the date. I want the date to pop up here. So what we're going to do is I'm going to say equals, and the function in Excel has created something called stock history. So once that pops up, I'm going to hit tab. I'm going to go to the summary stats, and now it's going to ask me for this ticker symbol. Select that cell, comma. Next it's going to ask me for the start date. Select that cell, comma. Now the end date. Now it's going to ask for the interval. The interval is the frequency of how much often do you want the data, daily, weekly, or monthly. So we put that in cell D1. I'm going to select that cell. Comma, next is header. I do want a header. I'm going to hit a 1 to show header. Comma. Now they're asking what do you want to show within each day, week, or month. Well, what I want is the date. I'm going to hit 0. Comma, and now the closing price. Close that up. I'm going to hit enter. And now what it did was, I forgot to do these calculations over here. I'm just going to delete that real quick because I want to show that with you. Okay, so now what we got the stock price of Mosaic that started on the first date, the longest date, 2010, and it goes to the most current date. And what is this? Monthly returns. And I got the date. Now when I enter in the next one for GM, I don't want the date because I already have the date. So we're going to do something different, and we're going to hard code the cells so we can just drag it over for Home Depot, Tesla, and Google. So let's hit equals. I'm going to hit stock history. Go back here. I'm going to select the next one, which was GM. I don't want to hard code that. I want to keep it there. I'm going to hit comma. I want the start date. Okay. Now I'm going to hit function F4. I want dollar signs. I want to show dollar signs in front of the column because I'm going to drag it to the right. So make sure you hit function F4 for dollar signs. Or you could just go in front of the letter, the B, and hit a dollar sign. Comma. Next, I want the end date. Well, when I drag that across, I don't want to drag this across. I want that in absolute value. So I'm going to hit function F4. I want to freeze that. Comma. The next one is the frequency. I want that cell. Function F4. I want to freeze that again. Comma. The next is header. I do want header. Comma. Now I don't want the date. I'm going to skip that. And I'm going to go directly to the close. I'm going to hit 1. Close it up. And now what we have is GM. I'm going to go over if you did the dollar signs correctly. Right? If you notice, it dragged over. The dollar signs are in front of this column and the row for each one. So if you do it right, you just have to do it one time. Next, what we want to calculate here is, I'm going to calculate is the monthly returns. or I'm sorry, the returns of that frequency. So I'm going to type in returns. All right, let me show you a few things I had to do earlier. Before we do that, I'm going to put the name. So I'm going to say equals, and I just want that mosaic name for the first return. Again, this sheet, I don't really care on making it look nice. This is just where the data is going in. I want this to look nice. All right, I'm going to show you something. To calculate different things in Excel, we have to do it this way. So if I'm going to calculate the percent change from this period from the previous period, I'm going to say equals. I'm going to go over to the row. I'm going to do mosaic, and I'm going to do I want to do this change from the previous. So I'm going to do that minus the previous. Close it up, and I'm going to divide it by the previous. So it's 9.2% from January to February in 2010. What I wanted to show, well, this is a lot of data. I'm going to go back here. I'm going to change the date to 2024. And I'm going to show how this works. I'm going to scroll down. Look what happens if we go beyond. Right? This is not good, which means I can't calculate the average with an error code. I don't want that negative 100% because no data entered there. What I want, depending on, to make this robust, depending on how long the interval of time is, I want it to be blank. So what I'm going to do, before I do that, go to this cell. You have to make a decision, how many cells would you want to calculate going down? So I'm going to show you how large we can get here. If you go all the way down, it could be over 1 million. So what I'm going to do is, I went to that cell, I'm going to go to that name up here, and I'm going to type in 75,000. That means if I hit enter, I want the possibility of 75,000 different returns. It's going to be daily for a lot of years, right? So on the bottom, what I'm going to do, and last video I did 50,000. I'm going to hit a space button, go to the next one, space button, go to the next one, space button, go to the next one, space, next one, space button. Why do I do that? If I hold down Control and up, it will go to the last previous. See how it does that really quick. If I did not hit that space, it would go down to over 1 million, and you don't want 1 million because it bogs Excel down. Okay, that's step number one. Number two, I have to do a more robust equation to make sure we don't get an error code. So I'm going to select that cell, and in front of that equal sign, I'm going to type in an equals, an if function. I'm going to make a logical test that states in that row, if this cell is greater than 0, which means there's a value in there, which means a stock can't be 0, it can't be negative. So if it, unless it's bankrupt, but the company doesn't exist, then you hit comma. Now it's asking you if it is greater than 0. If that is true, what do you want it to calculate? Well, I want it to calculate that percent change. Then, now it's asking, now I hit another comma, that's if it is true. If it is false, I'm going to put double quotation, put quotation twice, quote and unquote. And what that tells Excel is I want it to be blank. So I'll show you what it looks like. I'm going to go all the way down. I'm going to Control D, that's a downfill, and look what it did. It got rid of that negative 100 and that error, which means now it's a functional return analysis here. And what I'm going to do here is hold down Shift. I'm going to highlight it over to all the companies. Now I'm going to hold down Shift and hold down Control. Do it one more time, and it's going to go down 75,000 cells. Okay, I let everything go. I'm not holding anything down. Now I'm going to press Control. I'm gonna hit control to the right and control down. Look what it did. It has an equation in there. Since there's nothing in there, it's blank. If I go all the way up, now it's gonna calculate our returns for each time. Okay, let's go back to the summary stats. Now, I don't like this because if you gave that to somebody, how does anybody know a 2 is a month, or 0 is a day, or 1 is a week? So what we're gonna do is create a toggle switch. Before I do that, I'm gonna go down here. So we have summary stats. I got returns, this is all our data. And then I want another sheet. So hit that plus sign, get another sheet. And this is what we're gonna type here. I want an index number. And we'll call that 1 or 0, whatever. And then underneath this, I want daily returns. I want weekly returns. I want monthly. And that's what Excel will give you. Right next to it, I want 0, 1, and 2. Right next to it, I want 1, 2, and 3. And then here, I want how many days, or how many, what number would we have to multiply times to get a full year? Well, there's 252 trading days. There's 52 weeks and 12 months. Let's go back to our summary stats. I'm going to go to that frequency tab right here. I'm going to type in a choose function. First thing it's going to ask for is the index. I'm going to go back to sheet 3. That's this number, the index number. Next, it's going to ask me, so what it's going to say is, if index is 1, I want what to show. I want a 0 to pop up, because remember, 0 is the first number that is days. If this index number is a 2, I want weeks to show, which is a 1. If the index number is a 3, I want month, which is a 2. Remember, the index is a 1, and look what it is. That's a 0. Go back here. If I type in a 2, that's a 1. You type a 3, this would be a 2. So we want that choose function. Next, go to developer. Now, if you don't have developer, go to file, go to options, go to customize ribbon, and find developer. This will probably be unchecked for you. Check it, hit OK, and you should have developer pop up. Wait, what I want to select here is I'm going to go to insert. Not the first one, I'm going to do the second one. This is a combo box. I'm going to hit yes on the combo box. I'm going to go down here. I'm going to draw the combo box. Okay? Last time I did this, I made a mistake of which one I want. So, okay. So what I'm going to do here, that's a combo box. I want that to say, hold on, my Excel's acting a little weird there. I want that to say daily returns, weekly, or monthly, so the user who knows nothing about what we did can easily be user friendly. They can easily toggle which one they want and it'll automatically convert it. So what you're going to do is you're going to go here. I'm going to right click. I'm going to hit format control. I'm going to go to controls. Okay, now it's going to ask me what is my input range. Well, my input range, I'm going to go to sheet 3. That's going to be that daily, weekly, and monthly. What does that mean? The first one is daily, which means if the cell link, now I'm going to select the cell link, that's going to be that index number. If that's a 2, it's automatically going to show in the toggle box weekly. If this index number is a 1, it'll show daily. I'm going to hit enter. Go out of it. I'm going to select out of it, and I'm going to hit that box, and now look what we got. I'm going to hit daily. Look what pops up. A 0. I'm going to hit weekly. Look what pops up, a 1. It's going to automatically be robust for our calculations. And if I hit monthly, it'd be a 2. I'm going to show you something here, and I'm going to make it more robust on our summary page. Is a quick little technique. Well, if I look here, I don't know what we picked here, right? So what I'm going to do is I want to know if there's daily, weekly, or monthly returns. I'm going to say equals, and I'm going to do the choose function again. And what is it asking? It's asking for the index number. Well, I'm going to go to sheet 3. I'm going to go to this index number. I'm going to hit comma if it's a 3. Well, if it's a 1, I hit comma. What's the first thing? Daily, comma. If it's a 2, it'd be weekly, comma. If it's monthly, or a 3, it'd be monthly. So now look what it does. It does monthly returns. So if you change that and you want to go to your data sheet, it will automatically show that. What I'm going to do is hold down shift. I'm going to highlight that. I'm not going to merge the cell. I'm going to control 1. I'm going to go to the alignment. I'm going to go to the horizontal. I'm going to go to center across, and I'm going to hit OK. And that looks pretty nice. Okay, next we are going to calculate our summary statistics. Let's go to summary stats. And I'm going to put that here. And we'll call this summary. And I'm going to change this to make it more robust. Our summary statistics. And then underneath here, we're going to have the name of the company. Company name. I'm going to go, what I'm going to do is 1 down, and then now we're going to type in everything we want to calculate. I want to find the average return in that time frame. I want to calculate the yearly or the 12-month average. Okay. I can't say it's per year because I don't know if I did March to March. I want the 12-month average of that. Next, I'm going to do risk metrics. All right, what we want to calculate with our data, we're going to do standard deviation. And then I want yearly standard deviation. You know what, I'm going to move this move that to the right. I'm going to move that right there. Okay. So that's risk metrics. I'm going to draw a nice little and then I'm going to do the same here. I'm going to have an upper and lower border. Make it as nice as you can if you want to just directly input this into a PowerPoint and do stuff like that. Okay, so I got risk, yearly, and then I'm going to put beta underneath here. We want to calculate the beta. Remember, standard deviation is a risk that the stock experiences for the deviation of the price. Beta is how it responds to the market. Next, we calculate the stock price, the risk-free rate. Then we could do the required return. And we'll do the Kappa model. And then underneath that, I want the expected return of the market, which is the S&P 500. And then I'm going to do the Sharp ratio and the Traynor ratio. Okay, I gotta extend that out a little bit. Nope, I did right, never mind. Okay, so we'll make this look a little nicer. I'm gonna make that a nice little border there, or summary statistics. All right, let's go find the average. I wanna find the average of Mosaic. So all we have to do is do it one time. We could drag to find it. So I'm gonna go to, I'm gonna type in average, and I'm gonna go to returns. I'm gonna go to Mosaic here. I'm gonna hold down Shift and Control, and what I want is all 75,000 cells. And the reason why we have a blank, there's no error there, it will automatically only calculate the ones that have a number in it. Drag to the right, there's the average. Okay, next, I want to calculate the average 12-month rolling average, depending on what date we chose and what time frame we chose. So you can't call a year, you call it a 12-month rolling average. So what we need to do is convert this, whatever that is, right? This is months, this is the monthly return. Convert that to a year. Now the problem is we don't know if it's month, daily, or weekly, and we want to make it robust where it will change. So I'm gonna say equals, I'm gonna do the choose function. And now what it's asking is, what is the index number? I'm gonna go back to that sheet 3. I'm gonna select that index number. Okay, I'm gonna drag it across for all the stocks. I'm gonna hit function F4, comma. Now, what is it asking? If it's a 1, what do I want to multiply times the average return? Well, if it is a 1, I want daily returns multiplied. Function F4, freeze it, make it absolute. Comma, if it is a 2, what do I want it to multiply times? That's weekly. I want to multiply it times week. Freeze it, comma, and then if it's month, of course, we want the daily or the monthly 12. Function F4, and I'm going to close it up, and just to show you, right, it's month, so 12 came up. If I switch that to, of course, weeks, 52, we'll go back in there, and outside of that, I'm going to multiply that, whatever number that comes up, times that average return. Okay, let's go to percentage. I'm going to make it 1 decimal. Hold down Shift, have it go across, and now we found the 12-month average within that time period. What I'm going to do is I'm going to highlight that, hit Control B, B is boy, and that bolds it. Okay, next, standard deviation. So what I'm going to do is I'm going to hit equals STDEV. I'm going to do the sample size. I'm going to do a population, actually. I'm going to do the population. And what I'm going to do is go to the returns. Oh. I got to go all the way up. Hold down Control. It's a quick way. It goes all the way up. I'm just going to get out of that. So I want the standard deviation of all of those returns. Hold down Shift Control, goes down 75,000. I'm going to convert that to a percentage. I want 1 decimal. Hold down Shift. Oh, did I do the? I don't remember if I did the. No, I'm sorry. I don't want to freeze it. There's a standard deviation per month, per whatever we're in. Right now we're in monthly returns. That's per month. Okay, next, I want to convert the yearly standard deviation, or the 12-month, I should say, the 12-month standard deviation. Now, you don't multiply it like the average to find it. I wouldn't multiply it times 12, 52. What we want to do is I need to multiply it times the square root of either 252 52 or 12. So what we're going to do here is I'm going to say equals, well, we need a robust model to make sure it picks up 252, 52 or 12. So we'll do the choose function again. Go back to this. What is the index number? That's the index. Now I'm going to drag it across. So I'm going to freeze that. Function F4, comma. Now you're asking yourself, if it is a 1, what do you want selected? Well, I want this selected, 252. Function F4, comma. If it is a weekly, what do you want selected? Or a 1, I want, or I'm sorry, 2, I want weekly results, function F4. And if it is a 3 selected, what do you want? I want the monthly, and function F4. And then I'm going to close that up. I'm going to hit enter just to show you, okay, it brought it in. It brought the 12. So I'm going to go back into that function, and this is the equation that we need. I want the standard deviation per period multiplied times whatever number that is. I'm going to go outside the bracket and say to the power of, I'm going to say bracketing in 1 divided by 2, or you just say 0.5. That's the square root, or you could have typed in SQRT outside of the choose. So what is it? The standard deviation multiplied times the square root of either 252, 52, or 12 will give us the yearly standard deviation. Percent, 1 decimal, highlighted over, Control R. Looking good. Now next we want is beta, Control B. Well, beta is pretty simple. We could do math. All I did with beta was I selected that cell here. That's going to pull up all the data. Oh, I must have passed it. Oh, it's the third one right there. And that's going to produce our beta. Let's get the current stock price. Maybe we should say current. I'm going to say equals. I'm going to go back up there, hit that cell, and then look for the price. Drag it across. You know what? I'm going to insert a row. So if you select a cell and you hit Alt IR, it'll automatically drag it down. Let's include the price earnings ratio, which is an important ratio. So I'm going to say equals. I'm going to pick that there and then find the price earning ratio. I don't like when it's accounting. I like currency better. The dollar signs are closer. I think it looks a little nicer. Okay, next is the risk-free rate. Well, I already looked this one up. This was, at the time, roughly 4.13%. I was trying to think of an easy way just to bring it in all the time. This must be entered in. But we need that to calculate other things. So I'm going to put a nice little border around there. Okay, put a border there. Okay, now we're going to do what is the required return of each stock. Well, we have to know what is the expected return of the market. I'm going to say 11%. Do a little bit of research. That's the S&P 500. I guess we could find the average return of SPY, SPY. So if I did SPY, we could find the average return in that time period. You know, Smart Pay Holdings. I don't know if that's the one I wanted. I'm going to have to, well, Let's put Google back in there. All right, so we're going to calculate the CAPM model. We have to know the risk-free rate. I have to know the expected return of the market. So let's calculate that. I'm going to say equals. That's going to be the CAPM model is the risk-free rate. I'm going to hit function F4. That's going to freeze that cell. I'm going to say plus, and then we need the beta. I'm going to have the beta, and that's going to be multiplied times the return, expected return of the market minus the risk-free rate. Before I do that, I got to freeze that expected return of the market. Sometimes I'll forget to do that. And then subtract the risk-free rate. I'm going to freeze that as well. And then this is going to be our CAPM. To make it more robust, now unfortunately this CAPM is not within that time period. This is just a CAPM right now, what we expect of it. I guess we can go back in and create just for that time period, which would be, I think, very useful in that regard. So if we did it correctly, I'm going to drag that across, Control R, and then that's going to give us those values. At last but not least, we're going to do the Sharpe ratio. Okay, so to do the Sharpe ratio, we're going to say equals, and this is going to be the premium of what the stock offers. So that's going to be the 12-month average minus the risk-free rate, which is right here. So I want to freeze the risk-free rate. Then that's going to be divided by the standard deviation. Forgot to hit the divide part. Divide by standard deviation. Hit enter. Go to the right. I don't want percentage with Sharpe ratio, so I'm going to get it out of the percentage. You always want to see if you did it correctly. Yep. What's Sharpe ratio mean? Oh, I don't know why it converts it back to that. That just means that's the premium it's paying for what you're getting a unit of return for every 1 unit of risk. Okay, next is the Traynor index, and that's going to be the average return for that stock minus the beta. I'm sorry, not minus the beta, minus the risk-free rate. So the same thing. I want to do function F4 to freeze that, and I'm going to divide that by the beta. So that measures the risk of the market. Go there. Let's make that look a little nicer. Oop. I'm going to make little decimals. I don't need as many. I'm going to highlight all that. I'm going to go all the way up. I'm going to center this. Okay, we're almost done. Not quite. I want to find out, okay, what I want to do is, I want to find out, just really quick eyes, which stock in that time period had the highest return. So I'm going to highlight the 12-month average. I'm going to go to conditional formatting. I'm going to go to the top bottom rule. I'm going to hit the top 10%. I'm going to hit the color, go to custom format. I'm going to go to green, and then that's going to automatically, whatever stock you enter in, it'll show you the top performing stock. I want to know the highest risk. We'll do the same thing here. Go to conditional format, top bottom rule, top 10%. Go to custom. And let's do the Sharpe ratio. What is the highest Sharpe ratio? Okay, looking good. Everything's going to be self-adjusting. It'll automatically do that. You can switch things around. I can go 2015, but we still have one more major thing that I want to make it look a lot nicer. So you can see we could change some things. I can go to, let's say, Ford Motor Company instead. And look at that. Look how quick that is, and it compares all these stocks instantly. I'm going to select or right-click on it. And now I can grab it. I'm going to go over that frequency. Last but not least, I want our summary statistics to say exactly what it is. I showed it in the video, right? Before I do that, let's just center that. All right. I'm going to highlight all the way over. I'm going to get Control 1, horizontal, center across. Got that centered, but I don't like the way that looks. I want it to have data information where you can copy that and put it into a PowerPoint. Okay, this is going to be a long equation, but we're going to make it look, it's going to be very robust in the information that's given to us. So follow along. What I'm going to type here, I want everything cap. So I'm going to say equals, and if you hit upper, everything will be capitalized. If you hit lower, everything lower, lower caps. And if you hit proper, the first, it'll just capitalize just the first letter. So I'm going to say upper. And what I'm going to do is quotation mark. I'm going to say summary statistics, just like we did before, semicolon. And then I'm going to close it. I hit a space. I'm going to hit another quotation. And then I'm going to hit space, and then you have to say and. I want something else. Well, this is what's going to be robust. I want and a choose function. I think you know what I'm going to do here. We've done this a bunch of times. I'm going to go into the sheet, and I want that index number. Depending on what is selected, I'm going to hit comma. I want daily returns, comma, weekly returns, comma, or monthly returns. We don't need to freeze it. That's not important. And then I'm going to close that up. Then I'm going to hit space, and I want to put some more stuff in there. I want and I'm going to put a quotation mark. Space, and I want this bracket to be shown. So that's what's in the quotation, the quote. And then I'm going to do another quote, no space. So I want that bracket to show. Hit space again, and I want something else. So I'm going to type in the text function. Oh, sorry, I want a space. And then text, hit tab. And it's asking for a value, where the value that we want is the date. So I'm going to go to summary stats. What I want is that start date. So I'm going to hit B1. Sorry, I was looking at something. I thought I made a mistake there. You could select that, B1, or you could just type in B1. And then I'm going to hit comma. And then I'm going to hit space. I'm going to do a quote. And it's asking how I want the date. I want it MMMM, 4 M's. That's for the month. Space, DD for date. And then I'm going to hit a comma, space. I want years, Y, 4 times. And then I'm going to close the quote. And then I'm going to put a bracket there. And then I'm going to put a space and hit and again. We're going to do some more stuff here. And space. I'm going to do text again. I want text. And then now I want the end date. That is B2. I can just type in B2 if I wanted to. I'll put B2. Automatically selected it. And then I'm going to hit comma, space. I'm going to do quote, MMMM, space, DD, comma, space, Y, 4 Ys. And I'll show you it's going to look really nice. Quote. I'm going to hit the bracket, close it, and then I'm hit space again. And I'm not finished. And I want something else. I want something else as well. So I'm gonna do and, I'm gonna hit space. I want a quote again, comma, space, quote. So all I'm doing here is saying in the text, I always want that comma to show up. That's what the quotation. I always want this to show up. So I do the quote. I'm gonna do space. Next is and I want to add something. And now I want it to round a certain decimal. Well, what do I want rounded? Well, I'm gonna do a calculation of the years, or how many years it was. So what I'm gonna do is, in that bracket, I'm gonna hit B2, which is what? B2 is the end date, minus B1, which is the start date. Okay? I'm gonna close it up. So that's gonna give me all these days. It'll show you the distance between those two dates of how many days there are. So I'm gonna divide that by 365, which will give me how many years. Okay? And I'm gonna hit a comma. Now it's asking how many decimals you want to round it to. I want 1 decimal. I'm gonna close it up. Space. And we're almost there. Space. And I want to always say years. Remember I did upper, it's automatically going to put it like that. And then I want that bracket closed. That's what's going to show always. I'm going to put a quotation mark at the end. And then we're going to close the entire thing up. And if I made a mistake, it's not going to work. Hopefully it works. Oh man, beautiful thing just popped up. So look at that. We have this robust, which means I could change the date to 2010. Look what it's going to do. It automatically shows the date from January 1st, 2010 to February 21st, 2025. And what is it? How long? 15.2 years. Okay, I saw one mistake I made. Let me address that pretty quick. I think I skipped that. So if I had the text in between text, no, that's correct. I'm looking at, oh, the 2010 and the February is too close. I think that's the problem. So what we need to do is go right here where it says and text. So this is the mistake I made. I accidentally skipped that. So I'm going to go back to that and right here. I'm going to hit a space. Okay? I'm going to put a quote. Space, dash, space again, quote. I want that dash in between those dates. Let's see if that corrected our problem. Oh no, hold on, put on pause and let me see what's wrong. Alright, it's real quick. The only mistake I made was I had a missing and symbol in there, and that's why it wasn't working. So make sure you always have to and. I missed that. Now if I enter, now it does it properly, which is very quick and dynamic. I'll say 2008. Here's the results. It pops up. So what do we have here? Summary statistics, monthly returns from January 1st, 2008 to February 21st, 2025. Well, how long is that? 17.2 years of data. And then you can copy paste that, put it into your presentation. And that's it. I just want to say thank you very much for, if you watch the whole thing, which is going on for 50 minutes, a long time. But any questions, please leave a comment or you contact me directly. You can always contact me at drewblazik@live.com. I just want to say God bless and take care.